We heard from Kudlow saying that, you know what, the stimulus is not essential for the U.S. recovery, but of course for the markets, it is essential for the rally to persist.
Yeah, we believe that the market continues and the global economy and the U.S. economy will continue to need some sort of stimulus, some sort of measures to continue. If you look, since the COVID began, and the reason why the markets have rallied over the last since mid-May, and it has largely to do with massive monetary stimulus, massive fiscal stimulus, and the fact that vaccines are likely to come sooner rather than later. But the key thing here is the fiscal stimulus, and that is not going to go away for markets or for the recovery to strengthen.
How much of this stimulus has been factored into the market? Because when you take a look at the difference between the 5s and the 3s, it's deepened about 11 basis points over the past 2 weeks. What is the market telling you?
The market is concerned. One of the key reasons why we did see a sell-off in September has to do with the fact that it looked like the fiscal talks were dead, and that the package continues to be on again and off again, and that has been a key concern for markets. But if you look at the market, the U.S. economy still needs that support. If you look at, for example, just the difference in terms of how much people are saving. The U.S. consumer is saving a lot more, and the reason why they're saving a lot more is because of those fiscal transfers. So these fiscal transfers have been crucial for the average U.S. consumer to manage during these difficult times.
And Mary, we're tracking what's been going on with the PBOC, the renminbi moves here today. Potentially, some say, this renminbi strength was what really led to less volatility in this part of the world as well. What do you make of this move? Is it meaningful enough to reverse the strength we've seen in the currency? And what does this mean for risk assets?
I think generally what we've seen from the past, from the PBOC and from the central bank there, is that the key is not to have rapid currency appreciation. We see that the concern is more on the pace of the appreciation rather than the actual appreciation, and it has moved quite a bit. And for strong reasons, the data out of China has been quite positive, but we've moved quite considerably, from 7.16, now we're down to 6.17, and that move has just been from the end of May into early October. So it's more about the pace and limiting the pace of appreciation rather than halting the currency appreciation completely.
So do you think it changes the dynamics anyway on risk assets? We've been asking that to our MLive. Our team has asked that to our viewers as well about how this weaker yuan setting could actually affect risk assets moving forward. How do you see that?
The key thing here is they're not concerned about currency depreciation, and currency depreciation is really what could set a reversal on risk assets in the region. But as long as the economic data out of China continues to be positive, it's hard to dampen risk assets in that environment. The key thing is to show that the strength of the Chinese economy is continuing forward. It's just a matter of not having the currency move as quickly as it has over the past few months.
Mary, speaking of risk assets, how committed is the Fed in keeping risk asset prices elevated?
It's been interesting to see some of the comments from the Fed recently, whether it's from Powell or whether it's from some other members of the Fed. And the key message here that they're trying to relay to the markets is that unless they get more fiscal, then there's going to be no more monetary stimulus. And we've seen this before in the past with several central bankers. We saw it with Draghi in terms of pushing several policymakers in Europe to if they want more fiscal support from the central banks, then fiscal will have to come as well. And Jerome Powell and other members of the Fed are saying the same thing. So it's not only monetary stimulus that's going to be supportive, and discipline that is needed to get us through this COVID crisis, but it's also fiscal that is absolutely crucial.
And Mary, I'm taking a look at your conviction calls. You're liking European small caps. What's the story here? Is it about playing catch up?
A little bit of both. So we see that, especially in this environment, the likelihood of growth and economic growth is likely to broaden out. And especially, we had the European Recovery Fund, and that's been quite supportive for Europe overall. Yeah, we had a minor setback in Europe with cases increasing in COVID after summer holidays, but we don't expect that to persist. We expect that, policymakers will make sure that they mitigate that, and they're not looking to shut down the economies again. They've repeatedly mentioned this. So as global growth broadens out and as we see the environment, the economic momentum improve, something like European small caps should benefit from that from that environment.